Good morning, early birds and our European and Asian traders. Welcome to the morning edition of First Mover at Consensus, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me is my co-host, Lawrence Lewitton, CoinDesk managing editor of Global Capital Markets. Emily Parker will join us at 11 a.m. Lawrence, it's the last day of Consensus.
I know. I'm getting senioritis already. I'm just,
You were just being, flooded with an avalanche of knowledge and information. You're going to sleep well tonight. All right, checking in on Bitcoin, the CoinDesk Bitcoin price XBX index is currently trading at $39,642. Bitcoin is trading pretty flat for the past 24 hours. And the CoinDesk Ether price ETX index right now at 28.19. ETH is also pretty flat, but slightly up about 0.3% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So, Lawrence, we had a big day yesterday, and you did a write-up on Larry Summers, who is the former Treasury Secretary under the Clinton administration. He had some interesting stuff to say during Consensus.
Yeah, he basically, here's the thing. Larry Summers, of course, he was President Clinton's Secretary of the Treasury. He was an advisor to President Obama. It was even considered a potential pick for Obama's to be the Fed chair, and he had a lot to say about.
Yeah, Lawrence, hold on. Well, we got a clip I want to play. Let's have a listen.
The case for serenity, that it is remotely responsible, as a majority of members of the FOMC continue to insist, that it will be prudent to keep interest rates at zero for 3 more years, seems to me at the edge of absurd.
All right, break it down for us, Lawrence.
Yeah, I mean, this is the thing. Summers is very critical of President Biden and the Fed. He's critical of monetary stimulus and fiscal stimulus from the White House. Not necessarily that it exists. He's not against it, but he is worried about the magnitude. He said, look, if you boil it down to everything, you're going to do all this stimulus. You've got to be ready for inflation, and inflation causes a lot of problems in an economy. And that if you just think that you can put in trillions upon trillions of dollars into an economy, keep rates low for the next couple of years, 3 years, you got another thing coming, because inflation is over the horizon. That of course affects people who are investing in crypto. I mean, one of the big selling points for Bitcoin is that it's a hedge against inflation, because there's a limited supply of Bitcoin and there's a limited supply of other cryptocurrencies, but it doesn't seem to be a limited supply of dollars.
Mm-hmm. Very fascinating and interesting to hear his perspective on crypto. We also have guests CZ of Binance, Kathy Wood of ARK Invest later on during Consensus, and SBF, Sam Bankman-Fried of FTX will close out the conference with Tom Brady. Very excited to take a look at that.
You didn't spend enough time talking about Tom Brady here. I mean, this is Tom Brady.
We will. No worries. It's coming up. Tomorrow we got a whole new first mover and 11 too, guys. All right. Well, cases of COVID-19 unfortunately continue to climb at alarming rates in India. And our next guest formed the India Crypto Relief Fund in response, accepting crypto payments to distribute aid to those in need. Joining us now to discuss is Polygon co-founder and Chief Operations Officer, Sandeep Nalwal. Welcome to the show, Sandeep.
Hey, thanks for having me here.
Yeah, well, good on you on setting up this India Crypto Relief Fund. You're accepting crypto for COVID relief. What has been the response been? And we heard from Vitalik that he's donated over $1 billion worth in shitcoin. So how much have you raised? And what are the challenges of accepting crypto and turning it into fiat that can help with COVID relief?
Yeah, I mean, it's especially in India, India has been in news for quite some time that, crypto, the government wanted to have a sort of, I'll not say ban, but crack down on unauthorized use or kind of speculation on crypto. So, I myself was already, volunteering for some of the things, during the peak of the crisis. And, it was very difficult at that point in time. Like we used to start with 10 or 12 requests for oxygen, like which we, personally know via some friends and all that. And by the afternoon, almost like 6 or 7 or 8 of them would have perished just for the lack of oxygen. And that was a time I thought that something needs to be done. And what I can do, like I can maybe bring some donations and using crypto and all that. And that's why I had to say, if you see my original tweet, I had to say that I'll take personal responsibility of whatever regulatory compliance is required for this. I'll do that. So so we started this, and it really broke out. Vitalik really helped in that. Balaji was there and all that. So due to that, like we were able to initially raise like 6.5 to $8 million, but then Vitalik donated like $1 billion in ship coins. So it kind of exploded the funds treasury until now. Like I think we have got around $150 million in, like, converted into these stable coins and all that, because SHIB obviously is a speculative coin. So in terms of the funds treasury is pretty big, but then again, like how to take those funds in India, like I quickly figured out with my compliance officers that we should actually not take crypto directly into India, but do it like via some entity outside, convert it into bank accounts, and then directly donate into Indian NGOs. And NGOs have to be also FCRA approved, like who can receive foreign funds. So we did that, and now we have a channel where we can move the money into the Indian NGOs. But still, it's not the fastest of the process, right? So, I mean, I was able to raise like this $5-6 million within like 48 hours, right? And now, like, to move those dollars into India takes around at least 7 to 8 days. And I think that's what tells you about the future of crypto, that how and what kind of efficiencies it can bring into making this the whole globe into one single sort of more integrated economy.
Are you liquidating all the SHIB coin that Vitalik offered you? I mean, $1 billion.
The day we got it, immediately, I had, because SHIB community was, panicking a lot. So I immediately tweeted about it that, we are going to act responsible, because there is a lot of retail community involved here. And, I being a co-founder of Polygon, like, we are now one of the top 20 projects in the space, and we know like the feelings of the retail community firsthand. So, I immediately said that we are not going to dump all of it into the market. So we'll do it in a very small chunks. Of course, it's donation money, so we have to eventually do it, but then it will be spread across multiple months. So what we are doing is we are doing in 10% chunks of it. So, we still have only done, it's been like 2-3 weeks, and we've only done like 20%, 25% till now.
Well, great on you for taking up the management of that. I wonder if the government has reached out to you at all and started to look a little more fondly on the crypto community and the benefits that it could have.
Yeah. I mean, we are talking and collaborating with government embassies. Like, for example, we were able to source a lot of, oxygen cylinders into India via the Indian Navy channel and all that. So we are collaborating with government here and there. And I think that is possibly giving good name into that. And now with this big treasury, like, we want to do some long-term, stuff in India also, because this enables us now to do that. So we want to, kind of participate very heavily with the government in a public-private partnership. Government is doing good work. We want to collaborate with them and kind of expand it, take it into the ground. And then, maybe doing some long-term, like, for example, some genealogy research, if we can contribute into or kind of get private talent into it and all that. So we are looking at a lot of long-term initiatives at that.
Well, Sandeep, it's not only that, but the price of Matic, which is the native token of Polygon, obviously has gone up almost 10,000% year to date, according to some Messari data we have. And this is after billionaire investor Mark Cuban confirmed to CoinDesk that he's made an investment in Polygon, which is a layer 2 solution on Ethereum to scale. Now, I wonder, how did you connect with Cuban, and what is the relationship like? Has he offered any advice?
Yeah. So, I mean, Mark has invested in Polygon, quite late, but we have been, growing very exponentially for the last 6-8 months because we launched our mainnet last July. And, today, by the number of applications, we are the largest, like after Ethereum, we are the most, like, as a layer two also. If you compare with other layer ones, like, big names like, Solana, Polkadot, we are far ahead in terms of the third party adoption. That means the developer community adoption. And like all the biggest DeFi blue chip projects like Aave, like Curve Finance, Sushi Swap, in future Balancer and all that, all of these big ticket projects and blue chip projects have deployed on Polygon, and they have larger markets, larger number of users on the layer 2, on the Polygon, like Ethereum layer 2, instead of Ethereum. So reason being, you obviously Ethereum gas fees become so high at times that a lot of retail gets priced out. But then again, it's the most decentralized and secure platform. So having these more scalable platforms on top of Ethereum, and having these applications over there, the D apps and DeFi and NFT on that, makes it very easy for the user adoption. Like a lot of retail can to give an example, 30,000 users are using Aave on Ethereum, on Polygon, versus 26,000 on Ethereum, right? So that is one thing. And then NFTs also. So Mark was already using Polygon, like you must have known, that became a big news that Elon created an NFT, and then Mark also created NFTs, and Jack Dorsey NFTs his first. So all those were actually built on Polygon using some applications, right? So, but because we originated from India and all that, we are not that visible in the Western, this thing. But it has been growing like anything. It's already by far the biggest platform. So that growth has been there. And then Mark was already a user, so we reached out to him. He said that I've been using it and all that, and those conversations went very smooth from there.
Sandeep, first of all, thank you again for your humanitarian work. When Mark reached out to you to say that he was a user, I mean, he only used it in this one aspect, the NFT aspect, or is there anything else? And what applications do you find getting the most usage using Polygon?
Yeah, so I think Mark was not only using some of these NFT applications, but he was also using the decentralized exchanges. I think he was doing some sort of like small scale, because he's a very hands-on investor. Like when we had a call, I think it was one of the most mind-boggling calls for me, because the kind of in-depth knowledge of issues and the nuances of the industry he had, it was like, I was like, how is he able to know these, intricate details which we get to know after working months and months. And so he was already doing some small like farming and providing LPs and all that. And he also interacted with a game called Zedrun, which has, like, you must have heard about crypto kitties, right? So but it's like crypto horses. So I think he was also playing those NFTs and all that. But I think to answer your question, that which applications people are using more, I think these DeFi applications and the DEXs, like to swap their tokens and all that, are primary DEX. QuickSwap recently crossed $1 billion in liquidity. Aave has around $5 billion in liquidity now. So people use these applications.
I think Sandeep, you were on a panel and someone asked you if you'd reach out to Elon Musk. And I think, on offset, you said, yeah, sure. But I wonder if you actually followed up on that.
Yeah, I mean, I'm trying to create some pathways, but Elon is obviously not, not easy to reach. But then, we are trying to
get him on Twitter
to somehow.
Yeah, can slide into those DMs.
Yes,
likes
yes.
Twitter.
No, I mean, I can't DM him unless he follows me. But yeah, on Twitter, like we try to engage with his tweets and all that. Sometime, maybe hope someday he, sees it and responds.
Yeah. Sandeep, it's also been reported that the government of India may form a panel of experts to examine regulating crypto as digital assets. Do you have any insights into this panel? Have you, for instance, have you been asked to advise or participate in any way?
Till now, I have not got a direct reach out from the government. And I think that's what I've been saying in some of these panels also, that what government needs to do is to get some crypto native people on board. Like till now, I think the people who are advising them are big people from IBM, KPMG, and these big fours of the world and all. but then they are not crypto native people. Like, to understand the psyche of a crypto, let's say, trader or a DeFi user, you need to know people who are on the ground, right, and who are seeing it. So that's why, like, even I feel that, you know, somewhere or the other, we should get engaged with some government agencies. But we work with like extended government, not government, direct government agencies, but, you know, the like agencies like iSpirit, who advises government on the, you know, internet related things and, you know, telecom and all these innovations around it. So working with them, not directly with the government till now.
So Sandeep, what's next? What's the big project you're working on right now?
So with
He's
Polygon,
working on
you
a
mean,
lot
right?
already, as it is.
Well, yeah, I mean, obviously, you know, of course, but with Polygon.
Yeah, with Polygon, you know, like we are called, like generally we're called as savages, like in terms of like we work too much. So we just launched our Polygon SDK. Now with that, you can launch your own standalone chains on top of Ethereum. So think of it like Polkadot. You have para chains, you know, around the Polkadot central chain. With this Polygon SDK, you can have these Ethereum sort of para chains around Ethereum. Like, so you can have everybody can have their own chains on top of Ethereum. So, you know, we eventually expect enterprises and, you know, like a lot of large scale applications to have their own application chains. Then we are working on data availability layers, and then, you know, ZK rollups, optimistic rollups. There's a large, like, you know, a suite of, because that's what is Polygon. Polygon is basically a suite. We call it Swiss Army knife on top of Ethereum. So you can do all of these things on top of Ethereum, you know, in terms of your standalone chains, your rollups, your, you know, shared security chains and all that. So a lot coming for us in the coming year. Yeah.
Sandeep, super fascinating. You are disrupting the space and innovating in the best of ways, and you're really contributing to this humanitarian effort. So props to you. Really looking forward to seeing how you progress.
Yeah, thank you so much. Thank you so much, everyone, and thanks CoinDesk for having me here.
Yeah.
Thank you.
All right, that was Polygon co-founder and Chief Operations Officer Sandeep Nailwal. You can also help Sandeep fight the ongoing COVID crisis in India by going to cryptorelief.in. And coming up next, crypto markets update with Bannockburn Global Forex. Welcome back. Well, Dutch bank ING has been looking closely at decentralized finance, saying in a report last month that the best of both worlds is achieved if centralized and decentralized finance services cooperate. Joining us now is Mariana Gomez de la Villa, Program Director of Distributed Ledger Technology at ING Bank in Amsterdam. Welcome, Mariana.
Hi, Christina.
Good to have you. All right, so I'd like to hear, I'm curious, what have you been working on in terms of decentralized finance? I mean, the whole point of DeFi is to eliminate intermediaries like banks. So how would DeFi at ING fit together?
Well, we have been working with this technology for quite a long time, right? And for us, it's not the point of this intermediation, what actually attracts us, but it's more actually the opportunities that we can have in order to attract innovation, for example, in order to create new asset classes, in order to learn as well from the ecosystem and how is it evolving. And I think leveraging, for example, the experience that our colleagues that are working on the central finance space are granting, and the learnings that we are gathering from it is what matters the most. Because from that, we can learn and we can reinvent ourselves. We can, for example, attract investments, and as well enhance innovation. And we can offer as well consumer protection in the case of us launching any kind of assets, or even as well, for example, bring some sort of security, very security to the system, right? Because banks bring also stability to the financial ecosystem. So I don't think decentralized finance would need to disregard banks, but on the contrary, I think it's just an opportunity for us to see what role can we play and actually enhance and bring a better ecosystem moving forward for our clients, which is what matters most.
Good morning, Mariana. What problems is DeFi solving for banks, though?
For banks, for example, as I mentioned, they might have new business models that we haven't thought of ourselves or that were not possible before. And actually, the fact that they are able to experiment and have a more cowboy approach without that more regulation around it, those are things that we are watching closely because they can deploy these. So where are the gaps, and then we can see as well how can we help them overcome those gaps, how can we enhance our own processes. In this case, we found, for example, that decentralized finance have different properties, and those properties could also help a bank like ING in order to, again, keep innovation and to, for example, learn about the composability of those items, how they are deploying modular type of components, and how can we be more flexible, for example, in our infrastructure in order to keep innovating.
Okay. You also completed a case study with Aave. I would love to hear the results of that.
Well, actually, the case study was indeed a collaboration with them. It was a collaboration with them, in terms of being able to actually study closely how they have deployed their protocol, what kind of services are they rendering to consumers, how do they work on that in terms of security, for example. Aave was quite open to us. We hosted some knowledge sharing sessions, for us it was quite enlightening to see, the approach they take. Obviously, as a lot of different companies that are just starting, they also have some lessons learned that can regard from our experience. For example, in terms of deployment, in terms of, enterprise architecture, enterprise processes that you have to undergo in order to deploy codes to make sure, for example, that you are not vulnerable for fraud, etc., etc. So I think we can easily, help each other and providing each other's experience. So then both of the institutions can come up stronger in the future.
Where do you see the innovations happening for banks using DeFi? Do you think it's going to be mostly in the collateralized loan market, or is it non-collateralized loans? And when it comes to the traditional collateral, such as real estate and cars, is that something that you see DeFi doing ultimately, or do you think it'll just remain in the digital asset space?
Well, I do see, for example, a lot of innovation on asset classes that for institutions like ours, could play a huge role and quite a few risk. There are different types of institutions as well. So each institution may choose a different asset class to experiment with and to take over, some of the aspects of decentralized finance. In our case, I would say that it's quite early to comment on that because we are still, observing the space. We're still trying to define, what attracts us, what are those learning points, and what can we do with those. So in that case, I think depending on the institution and depending on their strategies, what you can withdraw from it. But I would say, for example, as I mentioned, the composability, the fact that some of these transactions are, accessible for a lot of different people that currently are, not having access to investment, for example, the innovation around it, how some of the rules are being monitored, and how they are also changing, or evolving. That's something that is quite attractive to us, and that we are looking closely for.
Interesting. It's interesting to see how you're bridging together the new technology with traditional finance. Thank you very much, Mariana, for joining us.
Thank you.
All right, that was ING Bank Program Director of Distributed Ledger Technology, Mariana Gomez. So checking in on Bitcoin, the CoinDesk Bitcoin Price XBX Index is currently trading at just about, that's the Ether one. The 2829 is the Ether ETX price index, and the CoinDesk Bitcoin XBX price right now is just under $40,000. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand. And joining us now to discuss the crypto markets is Bannockburn Global Forex Chief Market Strategist Mark Chandler. Welcome, Mark, to the show.
Thank you.
All right, so Mark, inflation has been a huge theme and a topic of conversation during consensus this week. So how is that impacting the dollar? And do you see crypto markets serving as a good hedge vis-a-vis gold?
Well, it is very interesting what's happened, right? As inflation has surged, not only inflation has surged, but expectations of it have surged as well. And when I look at what's happened over the past month, I'm not sure that's been the driver of the crypto space. I have the Bitcoin down about 28% over the past month, even though inflation's been rising, and gold is trading at its best level since January. We got above $1,900 an ounce this week.
Mm-hmm. We also heard from Larry Summers, as we spoke earlier during consensus. Let's have a listen.
We used to have a Fed that reassured people that it would prevent inflation. Now we have a Fed that reassures people that it won't worry about inflation until it's staggeringly self-evident. Or to put it in a more picturesque way, the Fed's idea used to be that it removed the punch bowl before the party got good. Now the Fed's doctrine is that it will only remove the punch bowl after it sees some people staggering around drunk.
Do you agree with Professor Summers?
I think Summers is it sort of like gives new meaning to that you can't teach an old dog new tricks. Summers, as you pointed out before, was a Treasury Secretary under Obama, and he advocated pulling back much too early after the global financial crisis in 07 and 08. And so this is just, for me, Summers, a disgruntled. He wanted to be the Federal Reserve Chair. He didn't get that job. And now whatever happens, he's blaming the government for too strong of stimulus, and he's blaming the Federal Reserve for not raising rates earlier. I think that he's ended up to be wrong on both counts, though I do think that and it's not about inflation. It's really about financial stability, which is another objective of the Federal Reserves. You know, our housing market in the U.S. is very strong. Housing prices nationally have been rising at their best level since something like 2005. And yet the Federal Reserve is buying $40 billion of mortgage-backed securities every month. I'm not sure that's necessary.
Well, actually, Professor Summers did mention that in his discussion. He did talk about the stimulus that he also questioned the Fed's role in the housing market, continuing to buy these mortgages, and yet you have and yet you have a booming housing economy. But one question that, as well, is that we have the 10-year yields coming off a bit, and as you said before, gold is still high, but it's at 1900, still not an all-time high. Bitcoin has come down a bit. So what's happening with inflation? Is inflation expectation? Maybe the question is this: is the expectation that inflation expectations are high a little too high? In other words, are we making too much hay about inflation?
I don't know who the we is who's making too much hay about inflation. I mean, as you see, the U.S. Treasury yield has fallen here in Q2 after a big rise in Q1. I think that what we've got to sort out here are several factors. One, of course, is the base effect. And that base effect is likely to be peaking this month. That is, when we get the May CPI next month, that'll probably be a near-term peak for inflation, for CPI, for the base effect into Q4. On the other hand, we are seeing some things that aren't really related to the base effect, but it has to do with the reopening of the economy at an uneven pace. So we are seeing some bottlenecks and some supply chain disruptions as demand has surged in a limited supply environment. And I think this is one of the takeaways I'd say about inflation. There could be a demand surge, or it could be supply. And right now, I think that any supply constraints are not the kind of things that make for sustained inflation.
I mean, couldn't we also though see we could see it last for a while, right? We could see the situation where supply and demand, where we have supply constraints last for a while the economy still can't figure out, for instance, how many people can go into a factory to work, how many people can work on a project, et cetera. And we have these delays in things like lumber and what have you. And then on the demand side, surging because more money's in the economy. I mean, can it persist a lot longer than let's say the next few months? So while we get over that hump from the base problem, do you see it potentially keeps going for several months afterwards?
Well, I do think that we have we do have some other signs of inflation, but remember what we're trying to do. I mean, we don't want to have deflation either. And so I think that what will happen, I suspect, is that supply will catch up. That is, businesses, farmers, other parts of industry will respond to the higher prices by expanding supply. I think that'll help dampen inflation. But remember where we were before the crisis hit. At the end of 2019, we had the lowest unemployment in a generation. We had relatively firm economy. And yet we had inflation below target. It's not just in the United States. Europe had a similar problem. Japan, the third largest economy in the world, is still experiencing deflation. So I'm not convinced that we are in this new era of high inflation. It's possible. But I want to sort of take the attitude of my friends from Missouri, the show me state.
Mark, thank you very much for your viewpoints. Very fascinating. Appreciate your time and insights this morning.
Thank you. Good luck to everybody.
Thank you.
That was Bannock Byrne, a Global Forex Chief Market Strategist, Mark Chandler. And unfortunately, that's it for this early edition of First Mover Part 1. Super interesting, but we'll be back for a special consensus edition of First Mover at 11 a.m. Eastern. And you'll watch at Consensus. Binance CEO CZ will be taking the main stage tonight, followed by ARK Invest's Kathy Wood, always a treat, and Tom Brady himself in conversation with Sam Bankman-Fried, the man. Thank you, Lawrence Lewitton, Managing Editor of Global Capital Markets. I'm your host, Christine Lee. See you for the next edition of First Mover at 11 a.m. You're watching CoinDesk TV.
Control and the abuse was also financial, and some of it also was just sort of this sense of controlling and limiting as a matter of personal sovereignty, and not just in a privacy sense. So I think that's been the approach, is like there's certainly an element of privacy, but it's really a sort of freedom from exploitation or violence. And that kind of opportunity to flourish. And that sort of very quickly put me into a public service lane with being a state prosecutor and then a federal prosecutor, and eventually getting into illicit finance, really to sort of work against exploitation at a larger scale. And whether that was criminal actors and people conducting Ponzi schemes or autocratic state actors, When I was at Justice in the money laundering section, one of the initiatives that I worked on and tried to help get going was using advanced analytics to investigate financing of human trafficking, and actually worked with a tech company to do a pilot on that. And then also on kleptocracy by foreign corrupt leaders and trying to get these assets back and return them to the countries. And then that sort of, with Venezuela and Iran and other countries involved in both the sort of oppressive regimes, but also cryptocurrency, got more and more into that, and eventually headed to the blockchain analytics company as in-house counsel, which was a great way to put it all together and work in that sort of mix of the financial integrity space, but also sort of building trust in this emergent system where there's still a lot of fraud and exploits, and then trying to balance that privacy and personal sovereignty that sort of maximizes the measured transparency of crypto. And that's sort of where it all sort of came together. And since then, it's been the rabbit hole that I think a lot of people go down once you're in looking at crypto. And I just think you can't sort of spend a couple hours with crypto without going down that. If you're a remotely curious animal, you're going to end up down there. So I think now it's sort of this sense of like, how do we work together to make that work for everybody?
Fantastic. So there are a lot of threads that we'll pull on there throughout the next 20 minutes, but I want to touch just briefly on this notion of personal sovereignty, because I think that is especially interesting for me to hear about from somebody candidly in your position at FinCEN. I think that for many of us, we don't often think of enforcement and personal sovereignty as being two sides of the same coin. But it sounds like for you, those two notions are very much intertwined, and it comes back to this idea of prevention of exploitation and justice and all of that. So I just want to touch very briefly before we get into the rest of it on how you think about personal sovereignty and really the roots of that and the work that you did around domestic violence and how that all intertwines with personal finances and public finances.
Yeah, sure. Yeah, it's I mean, all of it at the end of the day, to some degree, is about limiting other people's opportunity to flourish. And so there's a lot of that, it turns out that money is a great enabler of a lot of opportunity, but it's also an enabler and a driver of a lot of exploitation. And so I think for us, it's sort of, how do you find a way that you're working with, particularly with the beneficial ownership database and some of the new sort of like congressional statutes that we're supposed to implement on transparency, is like, how do you balance that transparency that's going to allow people to have faith in the system that they're dealing with, and that they're not going to be exploited in it, or even understand their counterparty in a reliable way, versus having the sort of mix of privacy, but also that sort of, that it's not unaccountable anonymity.
It's powerful. It feels like a paradox to talk about. And I imagine the devil will be in the details of how a lot of this gets rolled out and implemented. And so on that note, I would love to just touch on FinCEN itself. Not everyone in this audience may be intimately familiar with FinCEN and what its mandate is and what its mission is. I would love if you could talk a little bit about how all of this feeds into how you view FinCEN's mandate and mission, and what that looks like going forward, with particular emphasis, of course, on how that relates to the cryptocurrency space.
Yeah, sure. So we actually have two roles. In some countries, there's this entity would be in two different places, even potentially in the government. But first is, we're the administrator and sort of primary regulator of the Bank Secrecy Act, which is the main anti-money laundering framework that applies to financial institutions. And that would include money services businesses, which many cryptocurrency exchanges would be considered. And then we're also the financial intelligence unit, which means that from all this reporting and other information that we're getting, we're analyzing emergent risks and trends, and then trying to aggregate that and feed it back to the public in the form of advisories and alerts that might help them identify exploitation as quickly as possible, like early indicators of fraud and cybercrime and identity theft, We've been putting out a lot of alerts and advisories on well, ransomware, but also CARES Act fraud that's diverting money from getting to the right people. So, I see our mission, particularly now, as sort of moving from a post 9/11 orientation, which was heavily focused on sort of foreign terrorist threats, to our more recent sort of defining events, which would be, the post-Capitol riots and violent extremism, the post-election interference by foreign actors. We're in an economic recovery that is threatening opportunity by lots of people to flourish. And so I think we're approaching things, and I'm looking at things in the lens of that sort of, what are the limitations that are undermining a trust in the financial system so that everybody can sort of participate and flourish in that. And it's also the strength and resilience of the financial system. So, we're looking at it sort of both in promoting good growth and also sort of limiting factors for people.
Yeah, no, I think that's a very powerful framing and also very helpful historical context coming out of the sort of post 9/11 period into this new paradigm. I would love to just click in limiting sort of whoever gets deemed to be a bad actor from their access to the financial system. And I appreciate you framing that all in the context of, undermining trust in the financial system overall. But can you talk for a moment about how you square those two things, people's right to privacy, their right to self-determination, as you yourself put it, with the limiting side of what FinCEN is mandated to do?
Yeah, sure. No, it's a fair question. I think we're wrestling with that all the time. In fact, we just invited some folks to come in and talk who are working in the privacy space and had critical things to say even about the way that the Bank Secrecy Act is administered. And we said, great, come on in, let's talk. Because it's a constant balance and sort of delicate tension, I think, that you need a measure of transparency to know who's on the other side of a transaction or a deal. And there's commercial reasons for that too, that aren't just sort of regulatory compliance. But I think a lot of it for us is, what's the risk, and how do we find a way that people can, particularly at FinCEN, like access the financial system in a way that has enough measure of trust, whether that's knowing specifically who the other person is, or just knowing that when I go into this financial arrangement, it's not going to be a rug pull or whatever it's going to be, or an exploit. I mean, if you put it in cryptocurrency terms, the amount of hacks, I think it's 150 million hacks and fraud in the DeFi space in 2020. That's not just sort of chasing bad guys. It's like, there are people that want to participate in this, that not all of them can afford to lose everything. And I think that's a big piece of what we're trying to get to the middle ground on.
Yeah, fair enough. And a complex topic and a tricky middle ground. December, when Treasury came out with a proposal that would require crypto exchanges to collect personal information from customers who transfer an aggregate of $3,000 per day to unhosted wallets. Transfers of $10,000 per day would require the exchange to file a currency transaction report to FinCEN, reporting those transactions and the individuals making them to the federal government. There was a lot of controversy and fallout around everything from the timing of this to the specifics of it. And I think that this is maybe an example of where some of the powers within FinCEN and Treasury were trying to find what they thought would be a reasonable middle ground, and the industry had this very visceral backlash. I'm sure many in the audience will remember this or remember having written in on this. Can you give us an update on the current status and also a little bit of the background here?
Yeah, sure. Yeah, thanks for raising that. I think it's definitely the elephant in the room to some degree, but I think first it's an open rulemaking and nothing's been decided. So I want to be a little careful in how I talk about it. But I just say, as many people have noted, there was a point where there was a really strong sense of urgency among political leadership in the last administration for a variety of factors on timing and what the risks and concerns were to address this. And I think, you know, what you saw was the moment we were given the ability to extend that comment period, we did, and continued on with our engagement with industry on that. And we've been soliciting a lot of feedback, but also engagement with folks. And in addition to bringing in privacy advocates to talk to us recently, we've also actually, we have an innovation initiative, and we've just announced that we're dedicating an innovation hours program